All right, guys, welcome back to Granite Capital. This is John Galt, and today we're just having a look at the BTC USDT perp chart. All right, so what are we going to discuss today? I'm just going to go through the market moves, right? I'm just going to go through the market moves, and we are going to see what we were anticipating, what we noticed in the chart, and how we took certain trades. I'm not sure if this is the bottom or not, but the levels that I had found on the charts, they were pretty spot on, and I was just looking for a few very particular things. I hope the lighting is not bad because somehow my ring light is not working. It was working, and then I don't know what happened, but I believe this light is still good. So I believe you guys can see me, and I'm sure you guys are not here to see me. You guys are here for the charts. So yeah, let's stop the dilly dallying and start with the charts. Okay, so let me first just go to the monthly time frame. Okay, so a lot of guys actually asked me, how did I get that level? Okay, this level. So what is it? This is the monthly CE. What is monthly CE? If you guys watch ICTs, you guys already know what CE is. CE is, right? That's encroachment. Okay, so what is the importance of this level? This is the midpoint of an FVG. That is all you need to know for now. Okay, so I found the fair value gap right here. Also, this is again something that we have been researching for a long time now. So candle counts, right? Candle counts. Why skip the candle counts, right? So candle number one, the low is here. Candle number two does not count because it's an inside candle. Candle number three is an expansion candle. So this is actually your candle number two, and then we have the February candle, which has a really small body, just went up. It went down, but it took the high here. So this is candle number three. So what happens on candle number four? Candle number four generally tries to rebalance the imbalance. Okay, basically your candle number four will try to attack your fair value gap or fill it. Okay, that is what candle number four tries to do. And what candle number five does? So usually candle number five, what it does is, if we have a candle, suppose this closes here, so on the fifth we can do something like this, a small move down, and then we can just expand up, right? So the fifth candle can expand away from the fair value gap. Okay, so those are just a few of the very limited available theories that we have on these numbers. So anyways, so we had this level here. Let me do something. Let me change the settings here and let this level be visible on the 5-minute chart. So now we are going to the 5-minute chart, right? Again, I had shared something on my charts. I'd shared one of my charts on Twitter. So what was I looking for? First thing, what was I looking for? So we had this low here, right? Price went up, it came down, right? And then we had this low here. So I think price was somewhere around here, and I was anticipating something like something like this, and then this, and then this, right? And then this. Okay, so I was anticipating a market structure shift post the three drives. 1, 2, this is number 3. So we saw 3 drives. We saw what? The structure shift, right? We saw the structure shift. You could have taken the structure shift here, or you could have taken the structure shift here, right? Then you also have what? You also have your break of structure. When you have a break of structure, that is what? That is true market structure shift. Okay, so, or as I like to call it, that's the 3 confirmation, right? When you're looking for a bearish to bullish confirmation, what are you looking for? Market structure shift, number 1. Number 2, creation of a higher low, and then a break of structure, which gives you more confirmation, more confidence that the price can still go up. So what do you see here? You saw the 3 drives right there, and then you have market structure shift along with break of structure, and then you have what? You have this. That's your fair value gap. So what price does is it goes up, it comes down, creates this fair value gap, right? Price creates this fair value gap, and then it starts going up again. Where does it go? It goes to this high, right? Price goes to this high, it takes the liquidity. This is an important low. Why is this an important low? Because this is what we call an intermediate term low. That's an ITL, right? ITL are very important swing points. A swing low or a swing high. ITL are very important swing points. This is a part of what? This is a part of advanced market structure that ICT teaches. I think you'll find it on the 2022 mentorship episode 12. I think it was 12, 12 or 13. I think it was 12. Okay, so you can find ITL there. Basically, ITL is a swing that it balances the imbalance. Okay, so when you see this swing that balancing the FVG, that's an ITL. All right, like ITL or ITH, depends. So price goes up, comes down again, right? Price goes up, comes down again. Price is still trading where? Price is still trading at your CE level. All right, price is still trading at the CE level. And then what price does is price again goes up. Now again, this level here, if I go to the 15-minute time frame, what do I see? What do I see here? Am I going too far back? Yes. So this is the time frame. All right. So here again, this is the high that rebalanced this FVG, this fair value gap. This became what? An intermediate term high that's on the advanced price action. Sorry, advanced market structure lesson, right? So that's an intermediate term high. If price is able to break this intermediate term high, we can be more confident that price will again try to go up here. Okay, price can try to go up there again. So what price does? It goes above, takes this high, and then it takes a really big swing down. Price takes a really big swing down. Where? What do we have here? Right, what do we have here? We have these lows here, this low here, this low here, this low here. These are relative equal lows. When you have relative equal lows, price comes here, takes the liquidity from these relative equal lows, and then price starts to go up again. No, price starts to go up again. Let's go back to the 5-minute chart, right? So on the 5-minute chart, what do we have here? We have an order block that was maintaining the price. This order block kept the price afloat, right? It's not letting it fall down. So price went sideways, right? What is the range here? This was your range, right? So price goes there, spikes above it, closes above it. That's again what? That's your break of structure. Price can still go up, right? So now what price does? Price is now again going sideways. Price again going sideways. We had this 5-minute fair value gap here. Okay, we had this small fair value gap here. This is the low that balanced the imbalance. That's your intermediate term low. What does this mean? It means that if this low breaks, I will expect the price to come down, take again these relative equal lows. These are relative equal lows. Okay, and these can act as your low resistance liquidity runs, right? So if price falls down, it can easily take this liquidity, even the liquidity of this low, go to this is a 4-minute fair value gap. Price can go to this 4-minute fair value gap, and then it can start going up again, right? It needs to hold above this level. That's your monthly CE. As long as price is holding above that monthly CE level, that is good. That is good, right? Because if we are able to close our daily candles above this level, that gives you more confidence that high level time frames are supporting that level, right? Now what if price starts going up? If price starts going up, then see, it has already taken the liquidity of this high. If we get a close here, that's really good. That's really good. If we get a close here, I would like to see price go somewhere around here. I think there is a fair value gap there. I think so. And then these highs, right? Again, you can just use your ICT targets as well. Not this tool, wrong one. Uh, this one here. That's a ranger, that's your high and the low, and that's your algorithmic targets. So 1.5 is inside this fair value gap. So if you're looking for a long, here, this like short term, these can be your targets. Long term, this can be a good target. All right, this can be a good target. So I hope now you are better able to see how price is moving from, you know, one liquidity to the other, how price is searching for that liquidity, like we saw here, the three drives, right? This liquidity, price rejecting from the ITL, and then coming for these lows here, price creating these auto blocks and these fair value gaps, taking these liquidities here. These are equal highs actually, right? So where will price go? Price will keep on looking for the next liquidity, right? If price falls down below this ITL, I think it should go to this fair value gap. If it breaks above this, it should go either for this high or directly for this. This is what? This is your fair value gap. So let's see. We will see in time how price behaves, right? You cannot be 100% certain about something, but as a trader, like, it is your duty to make futuristic forecasts, right? That is how you trade. So I hope this video has been helpful to you guys, and a few of the concepts have been clear to you. Also, my rationale behind taking my longs on BTC USDT chart. So yeah, I hope this has been a valuable lesson for you guys. Also, the candle counting was also involved, right? So that's about it. I will take my leave here, and I will come again with more informative videos for you guys. All right. So till then, take care. Cheers.